welcome. So for those who are new here, please feel free to, if you have any questions during the actual presentation, you can always send it on the chat and I will answer those questions, okay? Because I have a few screens here, so every time you send something I can see on the chat, so feel free, all right? Ask questions, because with questions is when we learn the best. All right, so welcome. I think today we're going to be more likely exploring some trends that are driving, all right, and shaping the Forex market. So most particularly focusing on the, of course, central banks and central bank policies, but the broader global economic landscape influencing the exchange rates around the world. Okay, so the USD momentum, the JPY challenges, and the Australian dollar outlook for November 2024. I know we're already on pretty much halfway of November, but I thought it would be cool to sit down and share what I'm looking to the last few weeks of November. I do believe that we do have some, the US dollar, will the Trump trade still, continue, or will this trade take a breather, or Japanese yen, we've seen the Bank of Japan, whether it's more cautions on the stance or they're not going to hike the interest rates again. So this is making the Japanese yen very, very weak, and it continue to lose traction. Australian dollar is searching for some momentum. When I went on Google and searched Australian dollar to US dollar, I was like, oh wow, okay. It's 65 cents at the moment. And if we look at 5 years ago, it was like 77 cents. So it's pretty much more than 12 cents decline. It's crazy. Okay, this is a big decline. And if we see US dollar to AUD, it's basically the opposite. We're seeing at 154. All right, a few days ago, a few weeks ago, it was 148. So pretty big momentum the US dollar is taking. It's devastating all the other currencies. So that's pretty much it, what we're going to be looking today. So before we even go any further, welcome guys again, some new people, so nice. Let's just go through the risk disclaimer. I will mute myself and let you guys read for a minute, and then we should start. All right, let's get started. Get out of this now. Let me bring this screen to here. Perfect. All right. First thing I want to talk is the US dollar, right? If we come to the DXY, we can see that I've been actually talking about this is 30 minute. Let's go for the 4 hour. It's easier to see. All right. So since October, we haven't had one single week. All right. If we go to the weekly chart, we haven't had one single week of a negative close. This week haven't closed yet. Still, it's coming. It could be the first negative week since October, but we have been more than 7 weeks rally. Okay, so from here all the way to where it is now. So 1, 2, 3, 4, 5, 6, 7 weeks, week after week on a rally. It remains the central focus, I would say, of the Forex market. Is been dragging all the other currencies down. It's been, really huge moves happening at the moment. Even after, the post-election rally, strong retail sales data from the USA last week demonstrated some sort of resilience of the US consumer, and even still bolstering even more the if we go to the 4 hour, we can see right here, we can see on the 6th of November, we had a huge move up on the Trump, and after elections, it came down and then continued to go higher. Reaching the $107 mark, where I've made clear that's what was my target. I had a target at 105, sorry, 106. 106, and then I had a target on 107. So really, really interesting how market movements are going at the moment. Okay. You know, especially if we look to the USA consumers, they're pretty strong. All right. And it continues to boost even more confidence in the strength of the economy. So the data combined with the reassessment of the FMC, the Federal Reserve rate cut expectations, has given the US dollar considerable support. If we go to the CME, all right, so CME group, let me share this link with everyone here. CME. That's correct. It's on the chat now. I've just shared this link. And you come to dot plot, and then you come to chart. We can see that now the projection of the rate cut has been, I would say, a little bit of a step back from what it was a few months ago. Okay. For now, we have for this year in 2024 to finish the year around 4.5. Okay, central of 4.5. The blue lines, the dot lines, where you guys can see, is where we actually have the blue dots with the red dot is where we have the majority of the FMC participants' assessments of the appropriate monetary policy. And that's what we call the dot plot. Okay, very simple, just trying to explain. So if we look here, what are they thinking for 2024, right? So this is the whole year of 2024. They're around appropriate level of 4.5%. For next year, 2025, they're looking around 100 basis points cut and going to 3.5%, right? And this is where things is going to start to shrink a little bit more on the US dollar. And then on 2026, we're going to get to 3, well, below 3. And then on 2027, again, in the longer run, we're going to get down to 2.5. So if we look at, all right, that has been changing a little bit. In what instance? If we come back to target range and then we come to current, and that's where we have the next meeting on the 18th of December 2024. We have 58.4% of probability, you know, of the whole market participants expecting a 25 basis point cut. But after the consumer resilience of you know, the strong retail sales from the United States showing, you know, last week showing some resilience of the USA consumers, this is somewhere equilibrated. Okay, so it's 20% difference from no cut to a 25 basis points cut. If we look here, the current target range is at 4.5 to 475. Remember, it's not always a one target, is a range target from 4.5 to 475. So it's 25, you know, 0.25% of difference. When I say point, is after the first decimal place. So 58% of the market is expecting 25 basis points cut, and 41.6% is expecting no cuts, right? So this is somewhat continue to regulate itself until 18th of December. Now, however, there are some signs, as we can see right now on the weekly chart. Well, we don't need the weekly chart. Let me just do something better here. Let's get this one. So this week started on Monday, right there. So for this week, we can see that US dollar is losing a little bit of steam. Okay, so from here to where it is trading right now, it's negative 38 not negative 38%, 0.38% negative since beginning of this week. Historical you know, pairs with the Donald Trump's 2006 election suggest to us that the initial euphoria following the election may fade as the market participants recalibrate their expectations. So back then, as now, the market priced in many of Trump administration's potential economic positives early on. Okay, so remember on the 6th, when we come here, right, to this big candle here, this was when Donald Trump was elected, right? 6 of 6 and 7 of November, right? Both of those days. So this is you know, leaving a little bit of room for further upside without concrete policy developments. Because yes, Donald Trump will be better than Kamala Harris for economy and for the US dollar. Therefore, people, you know, buy US dollars because it is good at the moment. But you can't forget, I've mentioned it a few days ago, you can't forget that something that he says have not yet been made. You know, he says his projects are to be implemented on his own power. He can't do anything now, right? So next year, when he gets on power, he will analyze the situation of what Biden administration has left to him, and then he will be able to work with that to continue to do what he's proposed to do. If he can't do it, then everyone that believed on him that this would be able to do, you know, cutting tax, putting tariffs on exports and imports, making the US dollar a stronger currency. These are all types of things that Trump always says he's going to do. Now, if he can't do that, then it's game over. US dollar will be very, very weak from next year onwards. Do I think this will happen? Most likely not. Most likely we will continue to have a stronger US dollar until end of this year, all right? Because then the fade will happen to some correction, to some instance. If we look at the daily chart, we can see that we are on a consolidation, right? Very, very clear to see that right there. And we are on the top range of the consolidation. So there is plenty opportunities for the market to correct down to this level right here before it thinks to go up again. Okay. So what I believe it could happen is, yes, you know, came back down here and we're back down. So most likely this is what I think will happen from now on. If we break through the 107,500, oh, sorry, 108, no, yeah, 107,500. Oh, like, no, it's not 108. There we go. If we break to the 107,500, then it opens room for us to go all the way up to 114,811. That's going to be crazy, right? That's going to be really, really interesting to see. So my model pretty much reflects, you know, the view that showing that the US dollar appears to be overvalued at the moment, and you know, against key currencies like the euro, Australian dollar, Canadian dollar, and this sort of over evaluation, oversteaming into the price, adds vulnerability to the US dollar, and to any correction of the US dollar. Should incoming data or policy announcements disappoint the investors, this is what could happen. Okay, so remember that we had this whole move up. All right, let's go for the 4 hour. Remember, we had all of this move up here, pretty much based on policy decisions, good data, exceptional data, actually, and a election. All right, so that was pretty much the whole why it made this move. Remember on October, right here, when we had the first Friday of October, we had that NFP much stronger than what was expected to be like 311,000, so very strong, and then continue to go up. And then on November, we had a very bad, the very, very bad, the NFP. to be like 20,000, and then the market shoots down and then back up again with the election, you know, and now on this point. So it pretty much has been moved by data. So if any of those data come up to be very disappointing, then, you know, the correction should come. So looking ahead, there are several key points I'm looking that could shape the US dollar. The release of preliminary PMIs later on this week. This will provide some insights into the business activity and the economic resilience on how the economy is performing and how the business are actually pointing to consumer. The University of Michigan Consumer Sentiment Index for month of November will get some shed light on how confident the US consumers and households are feeling about the future. And additionally, I do believe that these speeches from the Federal Reserve officials will be very, very closely, I would say, scrutinize it, okay, if that's the word, scrutinize it, you know, for any dovish signals, right, particularly regarding the timing and the pace of the future cuts. If those events, you know, point to some sort of softer growth or a more cautious view of the Federal Reserve, most likely we will have the US dollar, you know, face renewed pressure from maybe December onwards. And this is why I think the 18th of December meeting for FMC, it's really, really, really important. Okay. Do you guys have any questions regarding US dollar? No questions? Okay. Now, before we move ahead, I want to show something. Okay, let me bring it here. Right here. So very easy to get into the ACY website. Just type acy.com and you will be driving to this website. Come to learn, come to market analysis. I will send the link, of course, but come to market analysis. Click on my name, Lucas Santos. Just a second. Perfect. And you will see the last, the just done this morning, Australian Path to Recovery Economic Outlook for 2025. Yeah. Okay. Now, there are some types of monetary policy. There's this expansionary and there is the contractionary. Okay. So the expansionary increase the amount of money in the circulation and usually by lowering the interest rates. And the contractionary is when the inflation becomes too high and decrease the money supply by raising interest rates. I will send these into the chat. ACY, sorry, blog post. So I've sent it on the chat blog post. Matthias, I will read your question in just 1 second. So basically, this this is something important that I want to mention about the actual FMC. So the FMC right now, it's on a contractionary sort of phase, moving to an expansionary sort of phase. But this is where this is the best time to be traded on the market, to be honest with everyone. You know, if you haven't yet, you know, placing some trades this year, there is definitely plenty of opportunities that you could be missing off. And I've shown so many of right here. Now, one thing is when the Fed or any other central banks are moving from a contractionary to an expansionary or to an expansionary to a contractionary, it's usually where we have majority of the opportunities on the market. Why? Because there's always one central bank around the G10, G20 economy that will be lagged behind that first one that did it first. So usually the one that do first is the weakest one or the strongest one. So in this case, the RBNZ, the Reserve Bank of New Zealand, is the one that haven't done any cut yet. The RBA, Reserve Bank of Australia, is the one that haven't done any cut yet. And this is why they're trying to maintain it higher for longer But if we actually look at the currency, the Australian dollar currency, as I just mentioned at the beginning of this webinar, we can see that they are not doing that great. Why? And that's because the consumer confidence and the investor confidence, the FDI, the foreign direct investors, are not confident that actually the RBA know what they're doing. So there's always a middle term, a middle ground that they have to understand on where to go further or to push it back. Okay. Perfect. Now, so that's pretty much what I want to show to you. Every day there is a new blog. I highly recommend you guys to come at the website and check it out and to learn and then market analysis. Most likely, if you are an ACY client, you will receive that directly to your email. So if you haven't yet opened an account with us, it's free. We don't charge you anything. You can have a demo account with us and test it out and see how you go. If you're starting on trading, if you're new to trading, or if you have some sort of experience already, definitely some good opportunities on the market. So open a demo account with us and see how you go. Now, moving ahead, next topic is about the Japanese yen and the weather. So let's go USD JPY. I'm using FinLogix for the charting at the moment. So let me share this link to everyone. Very easy to get into FinLogix actually. So just go into Google and type finlogix.com. And that's where you're going to be. So Control C, I'm going to send this to everyone here. FinLogix website. Perfecto. You have plenty of things that you can look at here. You have, charting tools. You have chart. You have tools, economic calendar, earning calendar. If you trade stocks, you have market sentiment, financial widgets. Actually, the Wednesday webinar, we've developed a strategy that I'm following up with everyone every Wednesday on the market sentiment. Okay, so if you haven't yet had time to come to a Wednesday, it's only the second time we've done last week. Tomorrow we're going to have one, so subscribe to it. I'm going to send the link on the chat, on the Telegram as well, so you guys can have a look on it. News, and then learn, and then pricing, just if you want to have this for your business. All right, before we move on to the USD JPY, but first I want to answer some questions here. So for the remaining part of this week, Matthias asked, for the remaining part of this week, what do you think we should look out for on the US dollar pairs? You mean like Aussie dollar, US dollar, Euro, US dollar, Japanese yen, or anything like that, right? Look, to be very honest with you, the majority of the week is not have much data. If you guys don't watch the YouTube videos I've posted on Monday, I always post Monday the week ahead, so you can check in there what I think about the week. Okay, let me just send the video for this week, where it is right here. The week ahead, there we go. Let me send it to you guys. Yeah. Perfect. It's in there. So the week ahead is very comprehensive. I try to, make a 5-minute video, 7-minute video, so everyone can understand. So basically, what I'm expecting for this week is, for the first half of the week until Wednesday, until tomorrow, we won't have much movements. As we are seeing at the moment, we haven't had much things happening on Euro dollar, Aussie dollar, USD JPY, some sort of correction, but still very shy moves. Okay. Nothing too volatile, nothing too with a momentum to one direction. But for the rest of the week, on Thursday and Friday, this is where I think the gold will actually, not the actual gold in terms of commodity, but the gold opportunities will be presenting themselves for us to enter in the market and carry those trades to next week. So most likely I will be shorting Euro dollar. I will be longing USD JPY. Pretty much I will be longing US dollar and shorting anything against it. Okay. That's what I am expecting for this week. We do have CPI from Eurozone today. I've had a video on that as well into the channel. So while you are on the channel, please go and have a look at the CPI and the PMIs video. I'm going to send the link right here at the description as well on the chat as well. CPI video. You can have a look on that. But yeah, that's pretty much what I think, Matthias. Next question. Sweet says, this week seems tricky because it's back with red news. Yes, I completely agree with you. Of course, there is some sort of high volatile news, but in my opinion, that's the best time to be trading, because if you are a trader, you want some movements. You want the market to move some way. You want the market to actually, do some sort of move. You want to make money in terms of, in very simple terms. And if you don't have volatility, if you don't have momentum to some direction, you won't be making money. Okay. So don't be afraid of volatility. Volatility is your friend when you understand risk management. All right. So moving on. So as I was saying, I'm here on FinLogix, and let's have a look at USD JPY. It has been catching my eyes, actually. Yeah. If we go to the 4-hour chart, we can see a very, very intriguing movement. Okay, so let's just zoom out. So on July, we had the top of USD JPY for all-time highs. Okay, this is where USD JPY have been in exactly 4th of July this year. So let's say 5 months ago, sorry. 5 months ago is where we were. Then US dollar, had some sort of correction, as well as the Japanese bank, the Bank of Japan was very, very smart to increase 25 basis points and get out of the, the ZIRP, the zero interest rates monetary policy, and increase to 0 or 25%. So then this made the Japanese yen very strong. But since then, they've lost momentum. Okay, so, and the weather has been much more cautious about the monetary policy. And the Japanese yen since then, since September, has been struggling to, get back into the front of the US dollar. So if we look at this move, some really good opportunities here, but if we look to this move, what should we expect from now forward? Okay, so in my opinion, the Japanese yen has been struggling, to gain some ground in recent weeks, as we can see on the chart, primarily due to caution's stance about, taken by the Bank of Japan. Earlier yesterday, we have Governor Kazu Ueda. I don't know if I pronounce his name correct, but Kazu Ueda, delivering his final major address before the Bank of Japan December meeting. And, market participants had been hoping for some hawkish signals, but particularly, in light of the recent Japanese yen weakness and the growing sort of inflationary pressures in Japan. But instead, whether maintaining a very neutral tone, okay, very, very neutral tone. And he was reiterating that the future policy decisions would depend on incoming data, and that will be assessed on a meeting-by-meeting basis. So while this measure approach may seem, prudent for the Japanese yen and for the Japan economy, it failed to, reassure investors who were looking for clear signals of a more aggressive normalization on the path. So basically, what whether should be done is, yes, we know that we have been losing some ground. We're working on that. He couldn't actually tell some sort of a hawkish stance. It was very, very neutral. And as I say, there's no middle ground on trading. You are actually, bullish or bearish. You can't be neutral in something. If you want to trade, that thing will move somewhere, right? It's going to be moving up or down, maybe sideways for a couple weeks, but after that, it's going to be up or down. So be decisive, pick and go for that. So that's what Weta haven't done. Weta is very, very on the middle ground, and he's not like, oh, maybe we go this side or maybe we go that side. Even though inflationary pressures have been coming to Japan, okay? Because remember what I've showed you guys right here. Oh no, where it is? Let's go back there.
Yeah.
Remember what I was showing here on the contractionary? It's when the inflation becomes too high and the central bank will decrease the money supply by raising the interest rates. So that's exactly what the investors were expecting for Weta to say. Look, inflation is coming, on a high period. We've just came from a negative from ZIRP, ZIRP, zero interest rates policy, now to a NIRP and IRP, to a negative, to a neutral interest rates policy, to maybe a PIRP, to a PI, PRP, so a positive interest rates policy. And he didn't. It was very neutral. And that pretty much weakens even more the Japanese yen. So with that, there is opportunity. And the opportunity is to short Japanese yen and long US dollar. So basically, what I'm looking here on the Japanese USD JPY is that sort of, pullbacks right here. It's good to us to maybe, where my Fibonacci? There we go. To maybe long the market. Okay, if we look at here, we're trading right now on the 61 of the Fibonacci. If you know a little bit of Fibonacci, there's always good opportunities around the 61% level retracement. And definitely my first level of long would be again on the all-time highs. And also breaks all the all-time highs maybe next year, looking at 170. Okay. 170.
That's really great. Okay. Like a paid course, you have to pay to implement something like that.
So basically something around that.
Was it like a paid course?
And then
like you have to yeah. Okay. Look, yeah,
okay. So maybe we have something around those levels. All right.
Additionally, if you
continuation of Japanese yen to be very weak, and then breaking through the top, retesting that top, and continue to 107. Sorry, guys, it's really tough to be talking all that time in fast thinking and everything, and my thought goes away very quick. So this is why I just try to drink some water. So yeah, that's pretty much my view on the Japanese yen. So now let's move on to trading view here very quick, because I want to show you the Japanese yen 10-year bonds. So the Japan market rate is currently pricing 50% chance, all right, of a 25 basis points rate hike at December meeting. If we come to this, the PMT tool, all right, let me just come here to this side, and then here and to here. So basically, the market is currently pricing a 50% chance of a 25 basis point rate hike in December. Let me just show everyone. Federal Reserve Bank of Japan at dashboard. Sorry, guys, it's a little bit slow. There we go. Okay, so basically here, next meeting hike, probability of 82% now, and the current rate is 0.25, and they're looking to change by 0.10%, and the next meeting will be on the 19th of December 2024. So, however, this probability may decline if the Bank of Japan does not articulate a stronger case for action soon. Meanwhile, some verbal interventions from Japan Minister of Finance, I can't pronounce his name. I think it's Katsumbo or something like that, but I know he's Kato. Kato is his surname. It's this guy here, Katsunobu Kato, Finance. Yeah, this guy here.
been out there the whole time. So.
This guy. So he's the Minister of Finance, Minister of State of Financial Services, and Minister in charge of overcoming deflation. I think it's not your time yet. But anyways, all right, I'm gonna get in a second, guys. Just finishing this and we'll get to the questions. There is some other questions there. We're running short on time, so let's just finish this. Okay, so if some verbal interventions from Japan Minister of Finance, the Kato, have attempted to stabilize Japanese yen, but still these efforts have not been sufficient to counter-correct broader market dynamics. So these risks of the Japanese are very, very clear. Continued weakness in the currency could drive up inflation forecasts, and this will of course force the Bank of Japan to act more aggressively, more decisively, more directly into the medium term. All right, they can't think about next year, next 2026, longer run. No, they have to actually act it now. All right, and it's not the problem, because Japanese yen is not only weakening this period here. Okay, if we go to the daily chart, and we come back,
Right now,
we can see that this weakness of the Japanese yen has been since 2021. All right, and it's since 2021 it was on 100 and went all the way to 154 now. All-time highs at 162 or 163. So really, really crazy, right? And continues. And yeah, that's pretty much, they have to act now. They can't leave that as it is. Okay. Now, that being said, if the absence of the concrete policy signals or a broader global risk aversion, then the Japanese yen is likely to remain very, very under pressure and very, very sold. Okay. Now, let me answer those questions. Today's Canada inflation rate data release, what is your opinion? And then that's a Satish question. Thanks for your question, Satish. And Sweet says, nice question, Satish, because I'm looking to long GBPCAD and CAD CHF. So you guys looking to long GBPCAD. GBPCAD, let's have a look at first in GBPCAD, very, very quick. GBPCAD. That's the daily chart. Okay, something interesting here. Have some sort of support here. Let's go for the 4-hour chart. I won't be able to analyze everything, but yeah. Okay, so GBPCAD, I think I would be looking to short actually Japanese yen and Canadian dollar, because yes, we're going to have the Canada inflation rate data today, but that Canada inflation rate data will be pretty much, very, very quick. So want to have much things happening. If we look to the retail positioning just here, we can see that the majority is long. So 56% is long. Let me just change this to a line, sorry, a bar chart.
He doesn't speak.
Just a second. Oh, it's very slow. My goodness. Anyways, let's leave it like that. So yeah, we can see that, it has been, it's really, really big difference. So I prefer to be on the short side at this moment. And we can see that the positions on the daily here, it's increasing on the long side. Okay, so it was big on the short side, reaching the peak on the 30th of October. So most likely up here, yeah, 30th of October was, everyone was short. Sorry, everyone was short during this period, and now everyone is long during this period. So most likely we'll be looking to break through this area. But maybe it's a good opportunity. Now, CAD CHF, shorting CAD CHF. So if you short in CAD CHF and long in GBPCAD, you pretty much hedge your position. But let's have a look at here. CAD CHF. Where's my chart here? So CAD CHF. Yeah, that's a very messy chart. Very, very consolidated. But yeah, if, you know, I will be looking to short as well. Yeah, we'll be looking to short as well. Maybe somewhere around these levels. You know, short from here to here. Very quick trade. All right. Moving on. We have the next topic. The Australian dollar is searching for some momentum. What is going on AUD USD? Have a look at that. A crazy move. All the way from 69 down to 64.50. Okay. Really interesting how, you know, the Australian dollar has faced some challenging times, despite, you know, some supportive developments in the commodity markets, as we've seen last week in iron ore prices. Let me see if we have iron ore here. Iron ore. We don't have iron ore here. We don't have iron ore, sorry. I do have here. Have a look. So we had some good moves happening here on last week here, but couldn't happen with Australian dollar. So, you know, it's typically provides some sort of tailwind for the Australian dollar, some sort of support for the Australian dollar, but feels like it's not happening this time. You know, we're having some sort of relief this week, but still. So despite this positive momentum has been overshadowed by some external factors, you know, so strong US retail sales, as I've mentioned before. This is resulting some sort of perception that the Federal Reserve may delay the rate cuts and have widened the rate differential between the USA and Australia. Maybe this differential will continue to weigh on the Australian dollar against the USD. That's what I think. Okay, this is why I would look to short again Australian dollar. So domestically, you know, talking as an Australian citizen here, the RBA, the Reserve Bank of Australia, has maintained a very cautious tone, and this is further limiting in some way the upside potential for the Australian dollar. This week we're gonna have this speech, some speeches by the RBA assistant Chris Kent. He's the governor, Chris Kent, and as well as the Michelle Bullock. And this is unlikely, okay, to signal some sort of major policy shifts, because it's just some normal speeches that they will give to the public. So the release of the RBA November meeting minutes may provide some additional context, but, you know, I'm not anticipating any surprises that could significantly alter the market sentiment. So basically, my models are now suggesting that the Australian dollar against the US dollar is undervalued, indicating, you know, some potential rebound, but only if external pressures or if the RBA adopts some sort of more accommodative instance. But, you know, major domestic or global catalysts, you know, if we don't have some big things happening around the world, the Australian dollar is likely to continue to remain bearish on the short term. Okay, that's my view on the AUD, most likely. Okay. Aditya says, Luca, don't you think USD CAD is a great opportunity? US dollar CAD, let me have a look here. USD CAD. That's the last one I'm doing for today, guys. So let's just have a look on US dollar CAD. In what side are you looking, Aditya? You're looking to long, you're looking to short. What are you looking to do here?
Right.
Okay. Yeah, I would be longing as well. Maybe a bit more, you know, pullback, and definitely would be longing it. Yeah. Okay, guys, thank you so much. So pretty much what we've looked in today is the US dollar, will the Trump trade take a breath? Most likely not until end of this year. I continue to say. Japanese yen, where does caution this stance? And you know, Japanese yen will continue to be very, very weak, and will continue to make some pressure towards the USD. And the Australian dollar is searching for momentum. So let's see how we go from the RBA. Guys, thank you so much for joining me today. Don't forget, we have one tomorrow as well. And I see you guys tomorrow. See you guys. Bye-bye.